What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Thursday, May 9th. Alright guys, Palantir stock here today up 16 cents per share. That's plus 0.75% in regular trading hours. As always, you know, it is down here a little bit after hours, but as always, take that with a grain of salt. Volume, we take a look here. Volume in the after hours is commonly very low. It's almost non-existent here, and stocks are easy. Even big stocks are easy to move after hours, almost concerningly so, on very little volume. So, listen, take that with a grain of salt, but what we're going to do here is we're going to take a quick look at the volume profile analysis, take a peek under the hood, pull out any bias, you know, underneath today's intraday movement that we can. We'll then take a look at the psychological levels that, you know, big money, smart money is going to be watching, so we need to be as well. We'll look at implied volatility, particularly important if you are an options trader, and then we'll finish out here with the expected move and the directional bias out of the chain heading into tomorrow. So let's start here with that volume profile on the 5-minute chart. Listen, by the way, if you're new here, Palantir is a daily upload, and my goal here is 10,000 subscribers. So I appreciate you subscribing to the channel, and I will keep the Palantir videos coming every day. All right, so let's take that peek under the hood here and look at the volume profile. Kind of interesting here today. So we get a very normal open. You know, if we compare this, of course, the volume is a little more normal here today. Now we see that fade. That is highly contextual. We expect that. All right, a little bit of a pop off of kind of that second bounce near the intraday low on this big green move. Now that small pop, listen guys, it is so slight. All right, but I would argue that's a very small amount of bullish bias. We have a few consecutive bars that are outside of what is contextual for that time of day, a little bit of an increase. Small bullish bias up out of the hole there. I'll take it. And then as we move through the day, you know, we see like 8 consecutive red bars, but we're really not seeing that out of context of volume. So somebody might argue that simply the amount of consecutive red bars is bias. I tend to want some out of context size, okay? Because if we were pulling, I mean, you could look and say the same thing here about the green bars because we have one neutral bar breaking it up. But aside from that, you essentially have, you know, 7 or 8 green consecutive bars. But I'm not going to assign any bias to either of those because I want size to really show bias. Now here, these two, as we saw pop and drop, kind of wash each other out realistically, kind of equal size, at least more or less, on the front and back side of that move. So then moving on into the close, little bit of just a tiny amount of bullish bias heading into the close, as we saw a little early increase in volume into what we typically see, which is a higher volume close. So now let's move on to the psychological self-fulfilling prophecy levels that we need to be watching here, starting with the very simple 30-minute chart. Now you guys can see here from yesterday, not much has changed. We're still below the 200 period and the 50 period, but bears, even though today was a very slight green day, almost flat, you bears kind of got what you were looking for more or less, but we'll see if this ends up backfiring because this 50 period on the 30-minute came low quickly and is now either going to help drive this stock below 2130 or it's going to break. Okay, we're right up against that potential resistance right now. So listen, bears, you guys want to see this reject hard, this 50 period come below that macro level of 2130, drive lower and reject off the 50 period here on the 30-minute chart. Whereas bulls, you guys want to see this get reclaimed as a support level with a high volume drive up through, a low volume retest, high volume bounce off the 50 period, which sets us up here on the 30-minute for a test of the 200 period. Because the ultimate goal is really to be back above both if you're a bull. Now, if we move on to that 4-hour chart, that 30 minutes is very interesting. The 4-hour here, a little bit less so. You can see that we are currently something like almost 5%, about 4.85% away from that 50 period. Listen, I'm paying it. I'm always watching the 4-hour, but the truth is, the only things that are specific to the 4-hour that I really care about are the 200 period and the 50 period, and the nearest one being almost 5% away. If we see a big green day out of Palantir, I will immediately pull this chart up to look for, if you're a bear, you know, it's already multiple percent against you at that point, but you'd want to see that lower, which is the 50, reject as resistance, right? But bulls, again, keeping in mind big picture, I want to see both of these eventually reclaim, starting with a reclaim of the 50 period. But again, it's nearly 5% away, so I'll be paying attention to this one if and when it comes back into play. Now, the most important chart of all, which is the daily. All right, let's zoom in here and take a look. Let's actually zoom in a little bit more, and we'll take a look. So, you guys remember yesterday's Palantir video, we were talking about how, unfortunately, we were above the 50-day moving average, about to test 25.50. We fall on earnings, giving up the 50-day, giving up the $23 level, and we're now back in that $21.30 to $23 channel. And we were right up against the lower end of that channel. Bears, I bet last night you were dreaming about breaking downside below 21.30 and just continuing a run down through 21, down toward 20. Well, it's been delayed. Okay. The bulls have not given up. Now, bulls, listen, 21.30 is the bottom of this channel. Any test of 21.30, I want to hold. Ideally, I just want to see a high volume drive away from 21.30, getting back toward the middle of that channel, ideally the $23 level, because really I want to get up out of this channel, reclaim 23, and then that 50-day is staring us in the face, which needs to be reclaimed as well. We're currently around 23.30. But on the flip side of that, bears, a downside break of 21.30, treating 21.30 as resistance, which can then act as a ceiling to help push down through 21 and down toward 20. That's ultimately what bears are looking for. Bulls also understand that psychology. Now, implied volatility, compared to the last couple of months here, you can see it, of course, fell after earnings. It fell again today, and it is now in the low range. If you're seeing IV crush, there's your culprit. If you're looking to purchase new options, well, conditions just became a lot more favorable because you're not paying up front for quite as much Vega value when a lot of it's squeezed out, at least compared to the last couple of months. All right, now, expected move. You're on Palantir. We, of course, don't have the luxury of daily expirations, unfortunately, but we can do our little bit of guesswork and pull it out anyway. So here's what I do in a situation like this. So today's Wednesday, we're heading into Thursday, okay? That plus or minus 71 cent expectation is by Friday's close compared to today's close. So we have 2 trading days. So in order to get Thursday, we divide that by 2, and then typically what I do is add back 50%. That gives us plus or minus 53 cents a share expected move by tomorrow's close. But, and the reason I add back 50% is to make up for the fact that the original divide by 2 assumes 2 red days or 2 green days. Okay? But when you're only dealing with 2 factors, 2 more trading days, 50% can be a little bit of a heavy add back. So on Wednesdays get a little bit awkward for that reason. So I have to take a little bit away, a little bit back, and we end up with a range that the market's expecting in terms of movement by tomorrow's close of something like plus or minus 40 to 50 or 55 cents. I am in the range of about plus or minus 40 to 50 cents. Okay, so that's kind of the volatility expectation we're being given by the market by tomorrow's close. And of course, they don't have to be correct. And you actually want them to be incorrect, because if you have an opinion that doesn't align with that, well, that's a position you could potentially take, right? It's kind of the whole point of the market is that you disagree with something, you position yourself, make money if you're right and the market's wrong. At least the market happened to be incorrect at the moment you took your position, and then in hindsight, they agree that you were in fact correct ahead of time, and then you make money, right? So you're probably thinking, okay, well, that's great, that's volatility expectation. What about directional bias? Well, we can pull that from the actual volume. We have a pretty decent sample size, over 500,000 total contracts traded here today. Of those, 346,000 were calls, about 186,000 were puts, so that's a call side bullish bias on the overall ratio today. But we can go one step further. We can break that down by time frame, the short-term speculators. So the 0 to 20 delta range had 147,000 calls and about 55,000 puts. Heavy bullish bias out of the short-term speculators as well. Listen, guys, if you're getting value out of these daily Palantir uploads, I ask you to do one thing, please. Leave a like on the video, and then get out of here and enjoy your day. I greatly appreciate it, and I'll see you in the next one.